What's different about the way that men and women invest in real estate?
General investment patterns of male versus female. Female always go with.
Let's talk about Sarah, the marketer.
Every successful entrepreneur, their biggest regret is always, I wish I made more time for my friends and my family.
Hello everyone, welcome to another episode of The Real Ones with Joel Alexander. Today I'm joined by a very special guest, Sarah Hewerdine. Welcome to the podcast.
Thank you. Thanks for having me.
Of course. So Sarah is the head of marketing at Stake. Stake democratizes, dare I say, access to investing in real estate pretty much. And you can start your investing journey in real estate at just 500 dirhams, and I'm not being paid to say this, or $136, whichever you subscribe to, right? So Sarah, your journey is a phenomenal one, right? I'm very excited for this because you're a, I wouldn't say veteran makes you sound old. Beast marketer is what I'm going to go for, right? And you've done it multiple times at Dubazol, you've done it at Hausa, and now you're doing it at Stake. And I'm sure there's a lot that I haven't even covered. But how does little old Sarah from Lincolnshire in England come to Dubai?
Norfolk? Yeah, University of Lincolnshire.
Damn, LinkedIn doesn't tell me that. My stalking abilities are not that great. Anyways, Norfolk. So tell me about that journey and what did 7-year-old Sarah want to become?
Oh, 7-year-old Sarah. I was very, very much into kind of after school curriculums when I was younger. Everything, Monday, Tuesday, Wednesday, Thursday. My mum would drive us around multiple places with my brother.
Right.
But we had an after school maths and English centre we always used to go to. And as we grew up and into our early teens, we were kind of tutoring children. So I'm not sure 7-year-old Sarah, but I think 13-year-old Sarah wanted to be a teacher.
Wow.
And I think a part of that also came from a air of naivety, not really knowing what's out there in the world.
Yeah.
But I really just loved the concept of teaching people. I really enjoyed that.
Yeah. And now you kind of do that in a way, right? Like
I never thought about that.
Yeah. I mean, Dubai Eye, your biggest business breakfast show in the MENA region, and you're on there sharing insights about property, something that everyone in the region just wants to get into and don't know how to get their start into that, right? But going back to the piece on Dubai, tell me about the first time that you sort of came to Dubai and the things that have kind of surprised you over the years.
So I first came to Dubai in 2015. Okay. I moved without ever visiting.
Wow.
I was so eager to get out of the UK. Yeah. I knew, I graduated and I moved straight out here because a part of me just felt like I'll come to the UK at some point and enjoy the UK. Yeah. But why not? So I was adamant to get abroad. I tried to get back to New York where I studied for part of my degree. I couldn't get back there just because of who's going to hire a fresh grad at 21 with no experience. So I came out to Dubai and I didn't really know what to expect. I didn't have expectations. No. I was very much a 2-year plan person who came out thinking 2 years and then I'll leave. But for me, what surprised me the most was the opportunity you can get at a young age. And it's something that, I've seen a lot of my friends that I grew up with in the UK, their kind of careers in London. And I definitely see Dubai has given me far more opportunities than I probably could have had if I was in London, for example.
Very interesting.
And I think that's also, you have to work for it. I really think you work hard in Dubai. And it's hard for me to say, right, I've never had a career elsewhere. My career is Dubai. But I think you work really hard. But I think Dubai rewards you no matter what your age.
Right. So that's the part that surprised, like basically disproportionate amount of effort going into your career and it rewards you almost like proportionally for that. Lovely. And talk to me about something that you do out here in Dubai that, you don't get to do back home. Like what is one of those things that is very specific to this part of the world?
Two things come to mind, maybe not super specific, but I wake surf. Yeah. And I absolutely love wake surfing. 6 a.m. on a Monday morning out on the water. No one else is there. You're like first up in Dubai. It's the best feeling. And I'm not sure I could do that very easily if I was in London, for example. So I'd say for me, that is something I could pick up and put in the UK. That would be amazing.
Yeah.
And it's really humbling because I think when you're like learning a new hobby, and I've really tried to do this as I've gotten older, I start a new hobby every single year because I think so often you're doing things for the first time and it's so painful failing. And I think like every time, for example, I like fall off my surfboard, you get back up, you go again, you listen to your instructor and you keep going. And I think there's actually something like quite humbling about that, and it makes you feel like it's okay to be a beginner. So I'd say that would be my number one. And my second one would be, I think the opportunity to network here, because it's such a small city. And very condensed. If you were to be in, for example, London, it's so vast that I can quickly go to a marketing event in an evening and meet some great people or make some, you know, potential mentors or people to sound ideas off. And I think that because it's quite a small community here, you get access to those opportunities and it's easy to just like get to them, you know. Whereas in London, you would have to travel and it would be more effort and it would be more difficult and building that network. Whereas I think here, because it is so condensed, you get those opportunities to meet more people more frequently and easily, I guess.
Yeah, and it's also who you meet, right? Like because it's not just, you know, like a random marketing shop that you're meeting. It's probably the biggest marketing shop, the tallest, like, you know, it's always the number one, like, you know, very real estate in that sense. But talk to me about, you know, coming back to real estate and talking about stake in general. I know that it democratizes access to real estate investment. I know that it fractionalizes that for the average individual like myself, like, you know, where I, you know, obviously don't have a phenomenal portfolio. I don't have enough money to put down a down payment on a big house and things like that. But at the same time, I do know that exposure to the asset class is really important. Stake does that. Tell me what else I need to know about stake.
So I think stake is really interesting because I think everyone has that affinity, like you mentioned, to real estate. And that isn't just, you know, local to this part of the world. That's wherever you travel around the world, everyone has that high affinity to real estate. So I think instantly when you think of like an investment platform, people get it. They get real estate. I'm buying real estate. I understand, you know, capital appreciation. I get that as a landlord, I will get income. I think those are the common themes people understand. Whereas when you think about stocks, bonds, crypto, for the general retail investor, they're more complex, how you understand them, how they work. So I think, first of all, the beauty about stake is real estate people understand. It's a 3-year-old startup, you know, we're a seed stage going on to our Series A, 3 founders that honestly complement each other in terms of their experience and skill set really well. But essentially, we give anybody the chance to own and build wealth through real estate, no matter where you are in the world. So we now have almost 500,000 users. Some of our biggest markets are not just in this region, UAE, Saudi, Kuwait, but also US, Canada, UK, France. We have people sitting on their couch in Japan investing in Dubai real estate in minutes. It's very, very cool. And it gives people that accessibility, which I think is Dubai wants people to be able to visit Dubai, invest in Dubai, and we make it more accessible and more easy for them to do so. And I think, you know, it comes with challenges along the way when you're building things, you know, something for the first time. It's pure innovation, but I think that we're helping so many people get access to Dubai real estate and build their wealth, and that doesn't happen overnight. We're not a, you know, I always say we're not trying to make it into a day trading platform. We're not crypto. You're not going to double your money overnight. Like it's about sustainably building wealth over long term. Yeah,
that's very interesting. And speaking of doubling your money, when are you launching off-plan properties?
I'm not sure.
Because that's what we really want. No, I'm kidding. I mean, obviously there was a time in the market when, you know, off-plan was extremely seen as like super risky and like, you know, some projects may not get funded or like this kind of things. But like now we've reached that maturity in the market where a lot of those things are reaching that kind of maturity.
I think off-plan is one of those things that there's always question marks on off-plan. You really have to look at the developer, the location, the build. And I think that you really have to understand the supply and as it's coming in, because I think that, you know, Dubai is expanding. We want to double our population, and we need homes for people to live in. Like, we need that. But I think that if you're, you know, we can't do off-plan at stake because we're regulated by the DFSA. We can only do Dubai residential ready currently. That's what we can do right now. But I think with off-plan, you've really got to look at like what you're buying. Price per square foot is increasing in off-plan. The unit sizes are getting smaller. That happens in most cities as you grow. It's very, very normal. It's not as if it's abnormal here. But I think that, you really have to think about not just when it gets handed over, I'm going to sell it for X premium.
Yeah.
Because I think a lot of the supply that's coming in, when it's due to be handed over, there's going to be a lot of supply that's handed over around that time.
Right.
That will have a hit on values. Like, that's definitely going to have some impact on the values. So I think whatever you buy, real estate should be long term. Real estate should always be long term. And I think if you believe in Dubai as a city, and you believe in the story of Dubai and the growth of Dubai, real estate is a good opportunity here, no matter how you invest in it. But you've got to invest with kind of the long term goggles and long term mindset.
Of course. Yeah. And, in the context of fractional sort of real estate investment, what do you think a lot of people miss / don't understand about it? And, as an individual that doesn't make, let's say, like a lot of, several millions of dirhams a month or whatever it is, I'm very cautious about how I invest my money. How do you think the average individual feels empowered enough and smart enough to invest in any form of real estate, whether it's fractionalized or not? And how do you guys help them make that decision better?
Good question. I think it is, I honestly think it comes down to education and transparency. When I think back to when I was working with Property Monitor 7-8 years ago now, this is when, we were really lobbying to get more transparency from the DLD. Jari data wasn't available, rental data wasn't available. You started to get more transaction data, but there wasn't a huge amount out there.
Now
and that's difficult.
APIs.
Whereas now, kudos to DLD, I think they've released so much data. And I think you're now finding some really good solutions that make that data understandable for the average retail investor. And I think being able to see what average transactions are and rental prices, and there's lots of different platforms that offer it now and take it from DLD and put it out there. So I think first of all, it's like educating and giving that layer of transparency of like what the market is doing, because I think everyone can tell a story, every seller can sell a story, every developer can sell a story, but at the end of the day you need to look at your data. So I think data is like highly important, and I think at Stake one of the things we always try to do is make sure people have that data. We are so clear and so transparent on the investment opportunity. We are very clear on fees, we're very clear on appreciation, what yields you can expect. And I think, we don't have a magic wand. We're technically still landlords, right? We don't own the real estate, but we still deal with the challenges that a landlord struggles with. Higher occupancy rates, making sure you've got people paying, the current market rent, making sure that you are getting paid and you are getting your checks on time, all the things that you can imagine you get as a normal landlord, everything that we do with a Stake. The beauty of it though is, as an investor, you don't deal with any of that. We deal with all of it. You open the app, download the app, invest in a bit of real estate in literally a matter of minutes and let us do the work. And then you get paid into your wallet every month, and then you self-capital appreciation when you want to. So I think real estate is something that everyone wants, everyone's interested in, but that education is important for people to feel comfortable in what they're investing in. Because like you say, there's people that, you have an average salary, every dirham counts, where you invest that dirham is incredibly scary. But I think that we have to remind ourselves that building wealth takes time, no matter what you invest in. And you can get lucky with some crypto one day. I don't know if anyone will right now.
You really don't like crypto. That's what I'm understanding.
But you definitely have to, you have to have that long-term mindset.
Very interesting. And, obviously you see a lot of people from, all over the world. Like you said, I think 160 countries. Am I getting? Yeah, there we go. 160 countries investing into Dubai. What are the patterns that you see with these people, right? Like what is it that interests them about Dubai? What kind of properties are they buying? And, what do they really want? Are they just, dipping their toes kind of a thing? Are they looking for some sort of rental returns and just like, the 6% yield in another diversified like market pretty much? Or do they want to move here? And do they want to build their life out here? What are you seeing?
I think there's many trends in that. I think on the latter, there's definitely affinity for people to want to live in Dubai, because I think there's a lot of, there's a lot in the Western world. There's a lot of, headwinds with inflation and interest rates that are still going on after years. So I think people look at Dubai as an option to, live and reside. And I think there's different trends when you look at kind of different subsectors of the market. Yields out here have definitely been reduced recently because of where we're at with the sales prices and the rental prices. But, as a market, we offer very strong rental yields when you compare it to other places around the world. So what you typically find is you've got foreign investors coming into this market thinking, wow, a 5%, 6% net yield is phenomenal.
Yep.
And you can have people in this market that have been used to the yields they've seen over the last few years. Sometimes it's not always good enough.
Yeah.
But I think the foreign investors coming into this market find it very attractive. I think we have all felt the pain of price increases over the last few years in the rental and sales market, yet still foreign investors come in and they still think it's good value. When you think being able to own a particular asset in a prime location like Dubai Marina and the price you pay versus what you'd pay in New York, Miami, wherever, there's very, very different. And I think they still look at this market having a lot more opportunity. Yeah. And then another thing, I was at an event recently with some investors from Hong Kong, and they said it felt like Hong Kong 20 years ago, because it felt like the opportunity, people willingness to do business, and the appetite and the hunger people just generally had in the city was like phenomenal. So I think that Dubai has a lot going for it in kind of different areas, and I think real estate is one part of it and what we offer. But I also think the general kind of proximity of Dubai, the talent we attract, I think all of that helps, build confidence in the region.
Right. And, I personally hope that a lot of this foreign investment, whilst it's great for the FDIs and the market and our price per square foot is only a third of, let's say, New York, and it's going to appreciate, it's going to become at that level. Being someone that grew up here, and having come up from a very, very humble beginnings, I would say. At least my parents grinded out here for 30 years before anything was anything.
You're
right?
born and raised Dubai, right?
Yeah, born in India, but 3 months later pretty much here. So yes,
you grew up here, right?
Yeah, so close to 3 decades here now, right? So I always catch myself in the context of prime real estate. So for $1 million, this is what you can get in London, New York, and in Dubai. But the average person in Dubai wants to invest 500 dirhams in real estate, wants to start there, right? So I hope that we're not pricing them out of the market. And I think the real reason I like stake so much is because it gives those people an opportunity. Rich people can do whatever they want, and that's fine. I feel like they can always find a way to invest. Yeah. But for the average individual, regionally, whether it's whether they're working in Saudi, whether they're working in Bahrain or in the UAE, I think it's very hard to get that access, and I think that's why stake matters.
Yeah, I agree. I think it's the accessibility. It is. It really is. And I think stake offers people that chance to get a piece. And it's quite we were doing a video a couple of weeks ago with an investor who sat in one of the apartments they fractionally owned. Yeah. And he sat in there and he looked around and he thought, I own Dubai. I own a bit of Dubai real estate. And he looked out the window and you can see the Burj Khalifa, and I own a bit of that as well. And, we've got investors that own a piece of the Burj Khalifa. It's also pretty cool. So I think it is accessibility. And I think a lot of people want to achieve certain things in Dubai, and the prices mean they can't. And stake gives them the opportunity to do that. And we do definitely have 2 very clear, distinct type of investors in stake. We have people that want to invest in real estate because they want to invest in stake because they can't afford to buy themselves and they want accessibility. But we also have a lot of investors that own real estate already. They invest in stocks, bonds, crypto, and they look at stake as another way to diversify building wealth. Yeah. So we have kind of 2 ends of the spectrum there on who invest. But we are really about democratizing and giving people the diversification, because I think, if you're going to go and buy real estate and save up every single penny you've got to buy one unit, you are highly accountable for how that unit performs. Yeah. On stake, you can spread that million dirham, let's say, across 10 properties, villas, apartments, different areas in Dubai. Some are short term, some in long term. You're completely diversifying, whereas you can't really do that if you're going yourself, unless you have large sums of wealth. No, of course. And in that context, there are several successful men and women in the context of the working class and in the context of your ultra high net worths as well. What is the sort of common or other, actually, let's just talk about patterns in investment for both men and women, right? What's different about the way that men and women invest in real estate in the UAE? So I think before we go to real estate, I think it's important to look at how men and women are, what that gender pay gap looks like, what the equality looks like in this region. And I think that, when we look at where we're at in terms of kind of pay gap, we're a lot further forward than we were even years ago. And we are even further forward than we are sometimes, places like the US. So we're definitely getting to a better place when we look at that. We do definitely still struggle when we look at women in leadership positions. We're only at 30% of women in senior leadership positions here. So we are slowly making progress, I think, towards gender equality in this region, but we still have a long way to go. So I think we're heading in the right direction, even when, like I say, when we compare ourselves to other counterparts. You know, the Nordics still remain top when it comes to gender equality. But I think that, you know, Dubai, the government here, a lot of the initiatives have definitely helping us bridge that gap. But I think we'd be lying to think that we have pure equality, because we don't, and I won't divulge into that. But when we look at the real estate space in particular, it's interesting because we are seeing growth in women investing into, you know, Dubai real estate. But you see a lot of reports where everyone is saying female investors have grown by 50%, which is amazing. And these numbers seem really big and exciting. But you've got to also remember the entire market has grown by that. So I think we are definitely seeing more women coming in and investing. But as a, you know, proportionate to men and the overall number of transactions, we haven't really grown that much.
Okay.
So for example, if we were to look at 2017, you had roughly women represented 20% of the transactions. Okay. When you look at 2022, they represented 22% of the transactions. So we've had a 2% increase there on women. So they are slowly eating more of an overall share of the transactions, but it's still 80% dominated by men. But I do think that we're seeing more Emirati women invest, which is amazing. So we are starting to see more pockets of female investors coming in. But I think it is really, really misleading when people say, you know, these 50% increase, because I think we really do have to look at the overall number as well and what baseline we're coming from.
Yeah, exactly. It's relative, not absolute at all. So, but I would like to see, actually, you probably know this already, you know, where do they invest, and like what kind of appetite are they looking for? Like, are they interested in, I'm not saying like localities, not talking about like JVC or Dubai Marina, but is there any differences in that? Are they used to do they prefer higher net yields, projects that are maybe slightly more taking a risk kind of a thing, or do they prefer like, you know, versus men, and like how that differs? Is there any discrepancy there or none at all?
So not particularly, not that I'm aware of anyway. Okay. My assumption would be based on, you know, the typical risk profile of a woman being more risk averse. I would estimate more women are going for longer term hold on real estate versus let's do a quick flip, let's buy this, get someone to renovate, sell it in 12 months. Because there's a higher element of risk there. So I think when you look at general investment patterns of male versus female always go with a long-term mindset. And I can't see that being any different than how they invest here.
Of course. So long-term wealth building, you know, protect the house. That's what, right? Absolutely. So obviously a lot's been going on in real estate outside of the UAE, in the US, for instance, right? So you got the National Association of Realtors that just had a settlement come in, and it was like $418 million, wherein, you know, your average listing is no longer going to have the commission sort of that's meant for that particular house upfront, kind of, you know, mentioned on there. And that leaves more room for negotiation in the context of fees and agent commissions, things like this. We're seeing about a correction of about 30%, kind of a thing, 25 to 30% roughly in those commissions at the prudent estimates. What do you think this does for real estate overall in the global kind of landscape? I'm not saying necessarily in the US, but more so what it looks like and what it means for our region, what it means for Dubai, Saudi, etc., and what it means for tech companies that are servicing real estate in these markets.
So I think US typically have the highest rate of commission around the world anyway. So that 6% is, you know, I think Germany reaches about 6%, but US is known for having the highest rate of commissions, typically paid by the seller. So I think that they're, in terms of how this impacts the rest of the world, honestly, the rest of the world is a lot lower. You look at the UK and it's a fraction of that. You know, we're even a lot less than the 6% that you typically see in the US. So I think what it will do in the US is it will bring those commissions down a little bit more into how we see the rest of the world. One thing that I think will be impacted will be, and this already has just started to happen, is, you know, in the US, for example, real estate portals are going to get impacted. So the real estate agencies, the brokers, aren't going to have as much higher commission. They're going to have less marketing dollar to spend. Where do they usually spend their marketing dollars? They spend it on portals. The portals will get hit. The portals won't get as much. I think Zillow's share price dropped. You will see an impact on that technology because there will probably be a consolidation of some of the brokerages in the market. And I think all of that will impact the bottom line of the portals. If anything, I don't think it's going to have as much of an impact really on this region, but I do think that there's, our commissions here are moderate when you look at us compared to the rest of the world. The US is definitely on that higher side, which is I think why it's impacting that. But I think, there could be shared ownership could become more common. In the US it's different as well, right? Because you've got 30-year mortgages that are fixed rate. So you've got a lot of people on 3-4% fixed rate mortgages that are staying put. Why would you leave right now? So you've kind of got the issue in the US right now as well, where nobody's really wanting to sell. So everyone's staying put, not selling. Supply has been reduced. So it's a little bit of a different market you have in the US versus the market activity we see here.
Oh, I think that's where kind of I disagree with you, right?
Oh,
in the cue the war music. No, but in the context of how the impact of it, doesn't really trickle down into this region. I think it does, but in a positive way.
Okay.
I think that they're going to come shopping for revenue out here. For me, I've already seen eXp Realty, launch hubs in the UK and in the UAE, which is, they're quiet, but they're here. And what are they? A cloud-based brokerage, right? So the fact that they are actually already in these markets and now they have had this correction in the US, and then they're basically going to be like, I need to, get my stock up 10%. How am I going to do that? Well, I'm going to let them know that I'm going to MENA. I'm going to EMEA, right? And I feel like it's an easy fix for them to be like, we're shopping for revenue elsewhere, 10% up.
Yeah.
Stock.
On the broker side, I see that.
Shareholders happy, everybody's happy. So your Compasses, Zillows of the world, end up coming in to see what Property Finder is doing here, what Bayut is doing here.
Good luck.
Yeah.
I do with Hauser.
Yeah. So, for me, I'm very excited by the prospect of what that US competition entering this market does for startups like Stake, startups like mine, very much servicing the real estate business out here. Does it get extremely heated? Does it get, very friendly in that sense? You've just had a partnership with Republic in the US, right? Great segue.
Yes.
And talk to me a little bit about that, because you're letting US investors invest in the UAE right now. And I think that's a pretty significant thing, because I don't think anyone's done that in this market before. So how do you think that collaboration looks like, and what's the fullest extent of that you would, envision?
I think it's interesting, Republic. It's a really high synergy for us at Stake, because Republic essentially democratizes their asset classes. So you can invest in startups from low minimums in the US. I think it's Stephen Bartlett, he's one of his businesses have gone through Republic. So Republic gives people the ability to invest in previously private asset classes and democratize that. We do that at Stake in real estate in this setting. One of the things for us at Stake is, we are Dubai based right now, but our hopes and dreams are to become more global. And I think that we want to make sure we offer our investors the ability to diversify on our platform. When you look at appetite that we're seeing in this region from the US and Canada, are they in the top 10 nationalities investing? No, but we are starting to see more and more. And I think the Golden Visa is also a part of that. We have a lot of, we offer the Golden Visa at Stake, but generally the Golden Visa offering we have here, you definitely see a lot from the US and Canada coming in. So I think there's that appetite for general US investors to come to this market. And the partnership we have ultimately is a direct investment through Republic on their app, on the website, come through to Stake and invest in Dubai real estate. And I think we want to take Dubai to the world. We want to have more of these partnerships so we can bring more international investors into this market without having to physically come here. And I think for us at Stake, it gives us the ability to broaden our horizons. It gives us the opportunity to acquire more investors, and ultimately, the bigger we get at Stake and the more successful we are, the more opportunities we can offer our investors. And Republic is our first step towards doing that.
So we've spoken about Sarah, the real estate expert. Let's talk about Sarah, the marketer, right? Obviously, when you think about startups and venture-backed startups especially, you think about private jets, you think about the big yacht parties, the, Beyonce coming to DJ for your annual party, and then you giving equity I'm talking about, I think, was it Uber?
It's Uber.
Yeah,
It's Uber.
Uber that did that. W for Beyonce for sure, but it's not always like that, right? And most of the time that's just on Netflix. So tell me about the scrappiest thing that you've had to do as a marketer building startups for several years now.
I wish I could hire Beyonce.
No.
I wish I could hire Beyonce.
I think the Stake founders would just be like,
There's such preconceived ideas behind the startup world. There really is. And I think, I've been through the rings with a few different startups, and I think I've been lucky to see it on the scaled side, the successful startup and the startup that hasn't been so successful.
Yeah.
And I think back to like every kind of step along the career journey and seeing all these, you learn what to do and you learn not what to do, but you also learn how to operate with close to no marketing budget. And one of the things at Heuser, so Heuser was a real estate portal founded by the biggest brokerages in this region. So you had Allsop, Better Homes, Driven, etc., Aspas, everybody kind of clubbed together to create this portal, which in essence is a fantastic idea.
Right.
But you're up against such large incumbents that have deep, deep pockets when it comes to marketing spend. And, it was very much a heavily B2B play. I think to make a portal work, you've got to have the agents on your side. You've got to get the businesses on your side to be able to acquire more users as well. It's that flywheel.
Yeah.
But one of the things we had at Heuser is because marketing budgets were so minute, it had to be scrappy. But one of the things we knew worked for the agents was competition. So competition works, don't really have much money, but you want to compete against each other. So we created a Heuser Fantasy Football League where all the agents could sign up to this football league. Now, I'm not a football expert or fantasy football league expert in the slightest, but essentially created a fantasy football league for all the agents to sign on, had a competition, and every single month, whoever won a brunch. And it was so simple, didn't really cost anything except that. But what it did is it made people compete. So you would walk through an office and you would hear agents arguing with each other about where they are on the fantasy football league table. And yes, it's fantasy football they're talking about. They're talking about the Heuser Fantasy Football League.
Right.
So cost us nothing, very scrappy, very small, but it definitely helped us chip away a little bit more and getting that like awareness among like who we needed to at the end of the day. But I think it's hard as well, the scrappy part. And that's something like me as a marketeer, it's definitely my thing I need to work on because I think, I'm a thinker as well. And and when there's two things. It's when you're like a deep thinker, does this work? Does this make sense? You can overanalyze what you do. Yeah. And I also think, which is a detriment sometimes of being scrappy. Yeah. And I think sometimes the being scrappy is just thinking, blow it, let's go for it. If it works, it works. If it doesn't, it doesn't. Yeah. That requires a level of like confidence, grit, and just do it and try and see. And if you fall flat on your face, fine. Get up and I think like that is one of my things that I'm so conscious, just go for it, like swallow your pride. If it doesn't work, it doesn't work. So like I think I had no choice at Heuser. You had to try and do a few different things, and we did a couple of other things like that. But I definitely think it's something that like I'm conscious I need to do more of and think about more and try to do it. But it's not easy. It's not easy. Yeah,
I'm sure.
As a marketeer, when you wear many hats and you're like
exactly
9 to 9 every day, it's hard work. It's having the time and space to think about that, I guess, as well. I mean, right, you're in a startup.
Going like constantly, right? Yeah. It's interesting. Yeah, business does get done at brunch, whether people like to, believe it or not. In the context of marketing as well, a lot of people in Dubai, especially, because what most folks don't know is the MENA region is actually one of the highest per capita for influencers, actually. So when you think about in that context, what do you think a lot of the prop tech companies and a lot of the brokerages are doing wrong about influencer collaborations right now?
I think the influencer space, so we've just started working with influencers really in the last kind of 6 months. Right. And it's been a lot of trial and error and trying to see what works, what doesn't work. I think too often, sometimes people in this region think you can get a lot for free. And I think a lot of people aren't placing enough value on influencers and essentially it's their own business. Right. And I think that don't get me wrong, you have to barter, you have to pay a fair, rate. But I also think people are reluctant to spend sometimes on the right influencers because they feel like it's too expensive.
Right.
It's a business you're partnering with at the end of the day, and you have to make it win on both sides.
Yeah.
But for us, we have very, very high tracking when we work with our influencers. Yeah. We look at it on an ROI basis rather than a brand awareness basis.
Exactly.
So for us, that has worked for us, and you have trial and error within that. Right. But I think there's a lot more you can do to track the results of influencers than what some people do. And I think too often you can barter too hard and not have enough kind of perceived value for that as an industry. Yeah. And then at the same time, think of it as just brand awareness, which, don't get me wrong, it is. But I think there's a lot you can do to track the results of the influencers to help you learn, iterate the type of people you're bringing in, what works, what doesn't, and then you go again and you try and expand. But it's not easy, the influencer space. It's very, very difficult because, I mean, gosh, getting out, reaching to them, speaking to as many influencers as possible, getting them on the other end of a phone, it's really, really hard. We're starting to partner now with more agencies, and I think I mentioned this to you last time we met. You have to partner with more agencies who have those relationships as well, because there's a lot of influencers in this space, but there's a lot of niche pockets that people want to go after. So, for example, for us, business, finance, investment, they are people that have an audience that understand what we're talking about. Yeah. That's a great synergy for us. But there's not many. And the ones that are there typically have good relationships with agencies that manage them. And it's how you find and connect with the right ones.
Right.
I could talk about influencers for so long. Influencers is hard work. It really is. And I think I love the space. I think it's unlocked this entire new channel of marketing that so many people have tapped into, haven't tapped into, don't think maybe they've tested enough with, but it's hard work.
Yeah, I mean, it's crazy because people would pay up to $250,000 for an ad space on a TV channel, like way back when, or maybe it's worse now, or I'm not sure what the numbers are, but it's the same thing. These guys have eyeballs too. It's just that they're better at retaining it at the first 3 seconds, the first 5 seconds, and then really build off of that, right? And like you said, not everyone is a creator that's right for your brand, right? Especially when you're in the finance space, real estate space. It's a lot of, it can't just be about shiny Lambos and the biggest house in the world or whatever. It needs to be a very honest, authentic sort of voice, kind of like mine, So where's my promo code to say?
It's true though. It is. No. It's having someone that knows their audience really well, and I think you can tell as a user on these platforms when someone feels like they know their audience and they don't. Yeah. And I think that you really have to kind of give away creative control to influencers to let them do their thing, right? And trust that they know how to speak to their audience. Sometimes it works, sometimes it doesn't. But there's only so much kind of control you can have before you hand over the reins and just let them communicate in the best way possible. Yeah,
and that's tough for a brand in finance and real estate to just leave creative control up to somebody else, But let's get out of the real estate and the tech and all of that, right? Let's talk about what advice you would give to your 21-year-old self.
Strap in. I would say strap in, find your mentors, listen to your mentors, and make enough time for the fun things in life, because I think you can get so caught up sometimes in working so hard and climbing the career ladder when ultimately life's short. And I think that the time you spend with your friends and your family and doing your hobbies and the things you love, and I think that if you can find that in work, great, but don't make time for it in other areas of your life.
No, I mean, I think we do that a lot, especially in startups. It's all consuming, right? It's not switch off at 5, unfortunately. That's what we sign up for, and that's fine in the sense that it's fulfilling, which is why we do it. We get up. You get to wake up every day and say, I'm democratizing access to real estate investment for every individual in the UAE. And I think that's big. And I think that's worth waking up for, right? But at the same time, it's the moments with your family, the moments with, all your friends and things like that, the things that you're not going to get obviously we're young and we're doing this right now, but when you're 45, 50, and so on, it's a very different game, and everyone's probably in a much different stage of life because they've all gone on to become partner at McKinsey and Bain and things like that, and you've done your fair share of grinding in probably way higher ups and way lower downs.
Yeah.
In that time, finding alignment or finding that middle ground where you can actually switch off your brain for a second and don't have to be a real estate expert.
I wish I knew how to do that.
Yeah, I know. And it just becomes a meme. Like, whenever I walk into a chai thing that all of our friends put together, it's like, the entrepreneur is here. Let's go. So it's just one of those things. But I do think that's a very valuable piece of advice.
Yeah.
You do need to take a step back and remember that life is pretty big and short at the same time.
Very short. And I think I read so many books, so many podcasts, and I love it, but every podcast I listen to of every successful entrepreneur or business person, their biggest regret is always, I wish I made more time for my friends and my family. And I always think about that, because I think that career is so important, and don't get me wrong, I love what I do, but I think those are really important moments, and I think that we can sometimes forget about that when you're caught up in all-consuming moments. Yeah, no, I completely agree. Well, what about yours? What's your advice to your 21-year-old self? Well, I'm not that far from 21 right now. No, I think it's kind of very the reason I resonated so much with what you said is just that, right? I think happiness is a very elusive thing, and I do think that for me, the hustle, the grind, the startup founder, let's do it, right? I've been doing it for about 6 years now, roughly, and 3 years in this particular venture, and it's it takes up everything. It takes up your whole time and your entire being. And I don't know how to describe that in any other way. Becomes your identity. Yeah, it becomes my identity. Yeah. And I don't complain about it. I love it, right? But at the same time, you kind of, you miss the little gatherings at the Weatherspoons, and you miss the little gatherings that, people have on big family vacations and things like that. Because, and then when you're actually on vacation, the privilege to be actually switched off, which I never want, right? But at the same time, I understand that other people have, is I don't need to check my emails. I don't need to check my WhatsApp. That's not happening for me ever, right? And I don't want that either, because I'm very protective of what I'm building, and I want to know what's going on 24/7. But at the same time, it's what's that like? Yeah. Right. So curiosity. Yeah. Name. Exactly. And it's probably more daunting. Yeah, but I think the grass is always greener, right? Yeah. And that's just what it is. So my advice to my 21-year-old self would be, just be present. Don't take yourself too seriously, and always treat everyone the same way. It doesn't matter. I think I've met I've met billionaires, I've met ministers of different countries doing different things at my very old age. And what I've realized is the realest conversations you have with these people is when you treat them as an equal, not when you're just going in there as some sort of fan, right? If you're a fan, you've already lost. Yeah. You're not gonna have a one-on-one. It's just you're just being spoken at, and that's pretty much all that's happening. Yeah. So that's I think it is. Yeah, it's so important, and I think that there's almost a appreciation, I think, when you're young, that I think I really try to take advantage of. People have such a understanding when you're young of failing, not getting things right, asking questions. The more senior you get in your career and the more you advance, there's almost I don't know if there's an internal thing, but you kind of have less tolerance for it, because you think, I've got 8 years of experience under my belt now, I should know absolutely everything about everything. And the truth is no one knows everything. Yeah. I genuinely, the more you kind of get you just realize everyone is figuring it out along the way, and everyone is learning along the way. And I think it's so humbling. I've had some of my mentors say to me, and I've got some fantastic mentors that I genuinely think the world of, and I'm so blessed to know. And they turn around and they're mid-40s saying, I actually don't know, and I'm figuring it out. And it's so refreshing to hear that. Yeah. And I think too often we feel like we should know all the answers. And you should be able to like have the answer to everything. The truth is you don't, and I think we're all figuring it out along the way.
Yeah, and I think that's actually a very like interesting piece, just because I think a lot of young people think that they don't know enough, and that's why they let me put myself through this investment banking grind for the next 5 years. Let me then do an MBA for another 2 years and spend even more money on that, and then I will have social proof the shit out of my life to an extent where the world will see me as invincible, right? But the CEO of that company doesn't know any more than you do. In fact, you're doing the work for them, right? Like, you know, obviously they have intelligence and nuances and, you know, abilities that you don't have because they have years on you. But at the same time, the differences that are there, like, you know, aren't as significant as you'd believe. The second you have that unlock, it's like, why am I not doing what they're doing? You're like, as some may say, in the matrix. So, but anyways, that's but anyways, Sarah, I really appreciate you taking the time.
Thank you.
This has been a pleasure. We've spoken about fractionalizing real estate investment. We've spoken about what it takes to be a scrappy marketer, and like, you know, take an industry even though you don't necessarily have the big purses all the time, right? And at the same time, very interesting to know what you think about life outside of, you know, real estate and being the expert. And I think everyone can take something from that for sure. So yeah, I really appreciate you taking the time. And if you've enjoyed this episode, feel free to like, comment, and subscribe. And by feel free, I mean you absolutely have to. Otherwise, you know, my head of marketing is going to come after me. And yeah, we will come back on the next episode with another phenomenal guest. Until then, goodbye.
Thanks so much.